Hello everyone. Today we the group number 5 are here to present a presentation on business decision making and the topic is the importance of ethics in accounting and plan. My name is Raju Pathak and my student ID is 20242861. In the first slide it represents the introduction of this topic. Accounting ethics guarantee accurate financial reports, develop trust among stakeholders, and ensures legal compliance. Further, in the accounting cycle process, expenses are matched with reverse earned for the given accounting period. Thus, this study has linked the concept of accounting cycle process and accounting ethics. Role in it understand how to maintain financial report accuracy. Slide number 3. It shows about accounting cycle role in a business. The accounting and its primary role is to maintain an accurate, complete, and systematic record of the business's financial transactions. The accounting cycle gets repeated in each fiscal years. The accounting cycle gets repeated in incorporate all the journal entries, adjusting ethics, debits, credits, and T accounts. Next slide. As you see in slide 4, the identification and analysis of business transaction. The accounting cycle initiates with the identification of business transactions and goes till the end part of preparing financial statements. Accounting ethics are based developed by various accounting bodies to discourage accounting from financial information misuses. Slide number 5, please. As you all can see that recording transaction in journal. The rules of accounting provides a framework and support to ensure the financial records and transparent and adequate. The figure above shows the three important rules that are applied as per account type such as nominal, real and personal. Further, accountant must ensure that all transactions have been recorded chrono- chronologically by applying proper ethical judgment that maintain process integrity. Please, slide number 6, please. Slide number 6 highlights the key prime measures about posting to the ledgers. Balancing of ledgers after posting from the journal entries is carried out to identify the differences at the year's end. Further, ethical standards can be maintained here by properly noticing any errors or commissions that can mislead stakeholders, affect financial statements. Now, I request one of my friend. I now one of my friend will address the next slide.
Hi, my name is Chitrakshi and my student ID is 20243134. And now I'm going to explain about the preparing an unadjusted trial balance. So, preparation of an unadjusted trial balance is created by compiling all the account balances of the ledger on a certain date. Preparing the account by being careful to avoid insurances that lead to threatening financial reporting reliability. And in next slide, we have adjusting entries for accruals and deferrals. Accruals are the expensive or payments on credit are until that period is owed, whereas deferrals represent prepayments where no delivery of product has still been made. And in next slide, number 9, ethical judgment in revenue and expense recognition. Ethical consideration, recognition of revenue or expenses can support compliance with the relevant laws and regulations that avoid legal action and penalties. Uh, and these figures for short-term gain leads to legal standing and damages stakeholder trust. And and we have a next slide is ethical responsibility in financial disclosures. ethical responsibility, adherence to accountant standards, insurance to creation of earnings without causing harm, and sacrificing principles throughout financial recording, and a proper code of ethics such as honest and ethical conduct and full, fair, timely, and accurate disclosure of the financial transaction helps to maintain ethical responsibility. And the next one, we have a closing entries and account balances. That is the slide number 11. A closing balance is a remaining account in COA chart of accounts, being positive or negative at the accounting period end. And here, the ethical practice is significant to ensure accuracy in the new accounting period. And next slide, we have a number 12, preparation of a post-closing trial balance. A post-closing trial balance is a balance sheet accounts which list with no 0 points, ensure that financial integrity is maintained for the next period opening balance. The trial balance has the end balances and carried down from their respective ledgers, and it's further used to prepare financial statements. However, the positive closing trial balance highlights the advantages after the completion of all the closing entries. And now my friend Parmeet is going to explain about the documentation and accountability in the cycle. Thank you.
Hi everyone, my name is Parmeet and my student ID is 2807. So my next slide is documentation and accountability in the cycle. Accountable document at a time of creating a financial record must be held safely by respective custodian. And second point is ethical accountant trace the path of transaction and maintain proper records to support stakeholder reviews and audits. So at various stages, a business will record financial transaction in the journal, evaluate the entries, and transfer the related detail to a journal ledger to make sure the book avoids error. So the next one is like flow of business transaction through ethical filters. So the ethical standard ensuring the accuracy of accounting flow are integrity, professional behavior, confidentially, and professional competence with due care. The second point is ensuring compliance with regulatory safeguarding and standard. The company reputation has been maintained. Consistent application of ethical standard throughout the transaction flow help to maintain and reports and accuracy reliability. So the next one is compliance with legal standard and IFRS. IFRS to international financial reporting standards that provide globally accepted accounting standards. So the second point is ethical compliance. Make sure the legal requirement in the financial statement preparation has been made. So after that, the next point is accuracy in management reporting. Accounting accuracy refer to the correctness and precision of recording and reported financial information in the financial statement. And ethical reporting in the case includes presenting true operational result that help to meet internal expectation and avoid any manipulation. So the best practice that can be maintained to ensure financial record accuracy and setting up a COE supporting by providing a structure to ensuring reporting consistency. So the next one is role of auditor and ethical oversight. So auditors are in charge of ensuring the reliability and accuracy of financial statement and other aspect of financial report under SA210. So transparency in financial reporting and audacity strengthen corporate governments and encourage accountability. So the next one is slide 18, like continuous ethical improvement in the accounting cycle. The first point is accountants should continuously update their knowledge and skill adhering to ethical principle to uphold confidentially and avoid conflict of interest. And the second point is accountants should consult with superior, consider significant consequences, and adhere to a professional code of ethics. And companies and business in order to have transparent concurrency and expectation, encouraging the transparency and giving adequate ethical training, enforcing accountability. This is crucial to boost open communication and encourage employees to feel comfortable to report any kind of encountered ethical and unethical behavior. And at last, there is a conclusion. Thus, it concluded that it is important to maintain ethical standards throughout the accounting cycle process to encourage transparency in financial reporting record. And the second point is ethical responsibility make the accountants uphold transparency and accuracy throughout the financial reporting. Thank you very much.
Thank you.
Thank you.